again and welcome. This is Robert Schein, Managing Director, Partner at Blanke Schein Wealth Management. Thank you for joining us on this Thursday edition of Market Insights and Observations. We want to discuss headlines, also recent economic data, and ultimately what's under the hood, what's moving markets. Markets have been choppy and volatile, so let's get right to it. Thanks for watching. So for February, the month continues to be choppy. We're getting fits and starts, and we're working our way through. Hopefully, we believe is a market bottom right now, and especially specifically in the NASDAQ. If you go back to January, the headlines were absolutely negative. Earnings came in better than expected on most accords, but then the negative takeaway was from earnings season was inflationary inputs. And so you want to be diversified, you want to have a balanced approach, which we do here at Blanke Schein Wealth Management for our clients, and you want to choose your shots. Companies that can pass on those inflationary pressures, whether it be wage or supply chain pressures, ultimately to the end consumer. Therefore, margins are protected and earnings will be there. We're going to have to wait a quarter to see who are the winners and who are the losers, but every day we're getting sort of a report as well, and we're seeing that. So we also have the geopolitical concerns and the Federal Reserve, obviously inflation, and they surveyed investors just recently, and what was the biggest concern? Was it the inflation or geopolitical? No, it was the economy. It's the economy, stupid. And don't forget, that's what Ronald Reagan said in the early 80s. It kind of feels like that. We got inflationary pressures, we've got some geopolitical turmoil, you've got some division here and there. So Rob, where is there any insight or even, let's say, something to be hopeful about? Well, if you look at some of the research that we have internally, we got this piece from Strategis earlier this morning, and they basically said that one of the barometers to basically forecast whether or not markets will be better, the same, or negative in a 6-month leading indicator was the put-call ratio. Again, it's not 100%, it's not exact science, but we look at the history going back to 1979, at least Strategis did, and what they found was when you get to a put-call ratio, which essentially just means puts our bets against the market and calls our bets for the market, so it's a bull-bear ratio. And where you get the barometer where we are today, and you look at it historically speaking, the forward return on the S&P 500, the average forward return based upon where the put-call ratio is today, is over an 8.2% rate of return for the S&P 500. If you take the whole collection together, the data set, it's all positive. In fact, the average is a 5.2. So is it 8.2 or 5.2? We don't know. But what we do know is, and our experience and our wisdom here has shown us through the years in guiding portfolios, is that when you get a buildup of all the headlines and they're negative, one after another, and they're piling up, usually, if not, for the most part, we see forward returns for markets look a lot better. Will this time be different? We certainly hope not, because we do want forward returns to be better from where we are right now. That's our base case here at Blanke Schein Wealth Management. We do believe we will have a positive year. Again, we will happen to ride it out to see where we are. But as Don Stockhausen said, the mindset today of the investor, and thanks Don for this, is that 2 hours is long term. And we got to get rid of that mindset. We got to go back to, we own great quality companies. We have a well-built, well-managed, well-maintained portfolio, and that can weather the ups and downs, or even the headlines from day to day and weekend to weekend, as we've done so for well over 4 decades here at Blanke Schein Wealth Management for our clients. So nothing really has changed. In fact, headlines, and as the negative headlines improve, that's when you kind of want to be like, okay, wait a minute. If everything's good out there, that's not so much the time to buy. But when everything's bad out there in terms of headlines, that has always been, again, by the empirical evidence of the also the put-call ratio, has also been a great leading indicator as to future returns of markets. So we'll see how this plays out. Now, we did get some good consumer data. Even Brian Moynihan from Bank of America said that what he's monitoring in Bank of America and all the credit card spending is up 20% year over year. And that's that rings true and in line with our thinking, because we're in the reopening. People are actually getting back out there. And then if you bring back travel and leisure and you bring back business travel, you're going to see all of that translate, all that money in the economy translate into balance sheets or corporate earnings. What markets don't like right now is the uncertainty from the Federal Reserve. You have one Federal Reserve president saying one thing, and 2 hours later you have some other Federal Reserve chairman saying something, or a president saying something completely different. And then the chairman comes out and says something completely different. So the Fed is losing credibility, and that's where it's feeding into the uncertainty. But I think if we get through a good 6 months here, we're going to get a lot more information from the direction and the guide glide path of the Fed. They'll lift off, raise interest rates, but I don't think it's going to be as aggressive as they're saying they will. Watch what they do versus what they say. And I think markets will then just settle in as we get closer to year end. So have a longer dated view. We have, in the meantime, we take advantage of this choppiness. We're putting money to work. If you've got cash out there, let us know. Because again, banks are still not paying us for our money, hard-earned dollars in the bank, in fact. So if you want, give us a call. We're happy to put money to work. This is a great time to buy when everything is on sale. So have a great day, and we'll see you again next time. Thanks for watching.